Picture this: a farmer stands in a field, smartphone in hand, accessing real-time data that could make or break their harvest. In an instant, artificial intelligence analyzes weather patterns, market trends, and crop health, providing crucial insights that were once left to chance. This isn't science fiction, it's the cutting edge of modern agriculture. Welcome to the Fields of Innovation YouTube channel, where smart farming starts here. Discover the future of agriculture as we explore groundbreaking technologies transforming the way we grow our food. Farming is both an ancient tradition and a modern business, yet it remains one of the riskiest industries in the world. Agriculture isn't just about growing crops, it's about managing uncertainty, weather, pests, global prices, and financial obligations. Unlike manufacturing, farmers can't simply pause production when conditions turn sour. This video delves into how AI-driven financial risk assessment could reshape the future of agriculture, giving farmers better tools, enabling banks to lend more confidently, and helping policymakers protect our vital food systems. Let's start by understanding the financial risks that plague agriculture. Weather unpredictability is a constant threat. Droughts and floods directly affect yields, while extreme storms can destroy entire harvests overnight. Climate change has made seasonal patterns increasingly unreliable, leaving farmers in a perpetual state of uncertainty. Price volatility is another major concern. Farmers depend on global supply and demand, meaning corn prices in the U.S. can be influenced by droughts in Brazil or sudden demand from China. Small farmers are especially vulnerable because they lack the resources to hedge risks like large agribusinesses can. Rising input costs further squeeze profit margins. Fertilizer, seeds, pesticides, machinery, labor, and fuel all eat into a farmer's bottom line. Price spikes, like the recent fertilizer shortage following the Russia-Ukraine conflict, can leave farmers exposed to crippling debt. Credit and loan risks compound these challenges. Many farmers rely on seasonal loans for seeds and equipment. If a harvest fails, repayment becomes impossible, leading to defaults, debt cycles, or even farm closures. This harsh reality underscores the urgent need for smarter risk management systems in agriculture. So how can AI help? Let's dive into the mechanics of these innovative systems. It all starts with data collection. Satellite imagery provides a bird's-eye view of soil moisture, crop health, and pest infestations. IoT sensors deployed across farms deliver real-time data on weather conditions, soil nutrients, and irrigation levels. Advanced weather forecasting models predict rainfall and temperature fluctuations with increasing accuracy. Market and trade data track global demand and pricing trends. Machine learning algorithms process these massive datasets, far more information than any human could analyze. These models can forecast crop yields, predict disease outbreaks, and even anticipate price shifts in agricultural markets. The heart of the system is risk scoring. AI assigns each farm a financial health score based on productivity, exposure to various risks, and repayment ability. Think of it as a credit score, but specialized for agriculture. This score becomes a powerful tool for decision-making across the industry. Banks use these scores to approve loans with greater confidence. Insurance companies can calculate premiums based on real data instead of educated guesswork. Farmers receive personalized recommendations like plant drought-resistant wheat this season, or delay fertilizer purchase until input prices drop. To see how this works in practice, let's look at some real-world case studies. In the United States, corn and soybean growers are using AI-powered crop insurance. Companies analyze satellite data to trigger insurance payouts automatically after a drought, eliminating lengthy paperwork and speeding up the claims process. In Canada, AI is being used to assess wheat yield risk under changing climate conditions. Farmers in the prairie provinces rely on predictive models to optimize their seeding and harvest dates, adapting to shifting weather patterns. The United Kingdom has seen AI revolutionize dairy farming. Banks now evaluate repayment risk using milk production data combined with market prices, allowing for more accurate and flexible lending to dairy farmers. In Australia, AI predicts risks in cattle and grain exports, a critical factor for trade with Asian markets. This technology helps farmers secure export contracts with greater confidence, even in the face of uncertain global conditions. These AI-driven risk assessment systems offer benefits across the agricultural ecosystem. For farmers, it means faster, easier loan approval, and better insurance terms. This newfound financial stability gives them the confidence to invest in sustainable technologies and long-term improvements to their operations. Banks and insurers benefit from lower default risks and more accurate premium pricing. They can also tap into new markets by supporting farmers who were previously seen as too risky for traditional financing. Governments and society as a whole reap rewards too. Stable food production enhances national food security. More efficient subsidy distribution ensures taxpayer money is used effectively. Risk-based incentives can even encourage the adoption of sustainable farming practices. aligning agricultural development with environmental goals. However, it's important to acknowledge the challenges and limitations of these AI systems. Data privacy is a major concern. Many farmers are understandably hesitant about sharing detailed information about their operations with corporations or governments. High adoption costs present another barrier. Many smallholder farmers simply cannot afford the IoT devices or AI subscriptions needed to fully participate in these systems. This risks creating a technological divide within the agricultural community. There's also the danger of over-reliance on algorithms. AI predictions can fail spectacularly if the input data is flawed or incomplete. That's why human expertise remains crucial. AI should guide farmer decision-making, not replace it entirely. The digital divide poses yet another hurdle. Farmers in remote areas may lack reliable internet access or the technical support needed to implement these sophisticated systems. Looking to the future, we can expect to see AI in agricultural finance continue to evolve. The integration of AI with blockchain technology could ensure transparent, tamper-proof farm contracts. Global trade systems may use AI to predict commodity flows and market shocks with unprecedented accuracy. Climate resilience will likely be a major focus, with AI supporting adaptive strategies against the effects of climate change. This could include recommending drought-resistant crop varieties or optimizing water usage in arid regions. There's enormous potential for expansion into developing nations. AI-powered risk assessment could help small farmers in Africa or Asia gain access to credit and financial services that were previously out of reach. We may also see the rise of AI as a service models in agriculture. Subscription-based access could make these powerful tools more affordable and accessible to a wider range of farmers. In conclusion, while farming will always involve some degree of risk, AI is transforming how we measure and manage those financial uncertainties. Farmers gain confidence to innovate, banks can lend more intelligently, and governments have new tools to build resilient food systems. The future of agriculture is smart, data-driven, and more sustainable than ever before. If you care about the future of farming and ensuring a stable, clean food supply for generations to come, subscribe to our channel and join the conversation. Together, we can cultivate a brighter future for agriculture and for our planet.